So continuing with our series here, we now have Module 1, Business Foundations and Legal Considerations. We're now into what most massage therapists are going to start or going to begin, which is an LLC, which stands for a limited liability company. So with the sole proprietorship and the partnerships, you are 100% liable for everything, not only in the business, but financially. So your personal assets are at risk. And in a limited liability, you're not now 100% liable. Your liability has just become limited. So this combines the pass-through taxation of a partnership with the limited liability of a corporation, which is really, really nice. The liability, it means that the members or the owners, which are typically they're not personally liable for the business debts, the business is, which protects your personal assets now. So you've now removed your personal assets like your home or your car or your investment accounts, and all your personal assets are now separate from your business. And you've just taken the person of the massage therapist and the business of the massage therapist, and you've just separated them away with an LLC. And this is what I would suggest everybody starts out with if they can. There are some filing forms and things like that, and if you need an accountant to set it up for you, it can be a little bit more cost involved, but it's pretty negligible. It should only be a couple $100, if that. And I think LegalZoom does an all-in package for like $400. So it's well worth your money to keep your personal assets safe and just register an LLC. And if you want to fill all the forms out yourself, I'm pretty sure you can just go on sba.gov and fill the forms out yourself, and it will reduce your cost a bit. So you don't have to have a professional do this for you. As far as taxes are concerned, you have profits and losses, and they can be passed through to the members on your personal tax returns without paying corporate tax now. So, you get the benefits of the separation of a corporation, but you don't get the corporate taxes of a corporation. So, it goes to the members' personal tax returns as just income, and you take like owner's draws. So as you get a profit and loss statement, let's say you brought in $10,000 that month, you spent $5,000, and then you drew $5,000 in personal income, you pay tax on the remaining $5,000 that you took out, not the full $10,000 that you had in revenue. So it's your profit minus your losses is what your take home is, and then you take an owner's draw and you pay personal income tax on your total income if you're filing jointly and all this other kind of stuff. Again, I am not a tax professional. I could have gotten some of that stuff wrong. You should certainly talk to a CPA. This is just my general understanding as a business owner of 3 different businesses. So I always talk to my tax professional. They give me the advice, and then I'm third party passing it along to you guys. So as far as I'm aware, an LLC is what you want to be when you're in the beginning stages of your company. And then as you start making more money, you're going to reach this tipping point of when you should take your LLC entity registration and turn it into something else, which is what we're going to talk about on the next video. But in the beginning stages, especially for the first few years, you could have your business be an LLC the whole time, but this is the recommended business entity registration for most massage therapists. When you start making more money and you really scale your business, though, I'm going to encourage you to go to the next step, which is in the following video. The reasons why an LLC is so nice is because of the operations. It's much more flexible than a corporation in terms of management, profit distributions, recording meeting minutes, and board members. You don't have to have any of that stuff. You can just be a single member LLC, and you don't have to worry about all the red tape and crossing all your T's and dotting all your I's. You just do your profit and loss, take your income and pay your taxes on it, and you separate your business from your personal liabilities. There's a bit more formalities than a sole proprietorship or a partnership, which again, you should talk to a tax professional about, but this is the entity registration that I would suggest everybody do when they're either first starting or they're in the early stages. After you scale up, you're going to want to transition into another entity registration, which will be in the following video, and it's called an S Corp.